Ram, just a few follow-up questions so I can understand why you have picked up IndusInd Bank. This is based on the fundamentals that you have chosen to buy IndusInd Bank?
Yes, it was. Like last year mid, it was prior to the election results. It was really with the deposit ratio and the loan ratio were really good. So considering that, I've invested in this along with a few others like IDFC First and Karur Vysya Bank.
Got it. Understood. Samir, I'll come to you on the fundamentals then. He's bought at levels of 1,140. The stock is currently trading just above that 1,000 mark. But of late, you've seen a little bit of trouble on the loan book side in terms of delinquencies, and IndusInd Bank has not been able to miss out on that or remain unscathed in that. So would you say that he should continue holding or are there better plays? He already has IDFC First. If I remember correctly, you like IDFC First. I'm not sure if I'm right.
You're absolutely right, Alex. I like IDFC First, but I also like IndusInd Bank, right? So let's be honest. IndusInd Bank has not had that much of a rise of NPA that, the street has hammered the stock down by over 40%. And I think in the last, not 40, maybe 30% in the last, say 2 months. Now, where the problem lies for them is they have reduced their loans towards the microfinance segment, which is the high yielding book for IndusInd Bank. That is the Bharat Financial side book, right? So when that happens, your higher yielding interest earning assets go down, your NIMs compress, and which is what happened in the current quarter. What they have also done is they've taken an enabling provision for any risk to the microfinance book that could arise over the next 3 to 6 months. So that they don't have to provide aggressively when the actual loans may turn default. They not necessarily they will, but they could. So they've taken a bit of provision. Now, the street obviously didn't like that. They didn't like the fact that the NIMs have come under pressure because that means the guidance that the management had given obviously will not get met. So I agree that yes, a correction could have come, but not maybe this large. I believe the microfinance business will continue to grow over time. It'll take another 3 months, maybe another 6 months before it bottoms out and stabilizes and bottoms out. But you got to remember that IndusInd Bank is not only a microfinance lender. They're also lending to other businesses. They have housing finance loans. They have the jewelry business where they give a lot of loans. They have the auto vehicle financing, which is the biggest part of their portfolio, which is continuing to grow. So look, they will be able to scale up some of the other businesses. Although this part of the business may struggle. So for me, it is a buy. The valuations are very, very attractive. Disclaimer, I have been buying at these falls. So maybe there is a slight bias, but I am very, very positive. I think somebody should hold on to IndusInd Bank. Now, coming to the second part of the question, which you asked, Alex, is IDFC one of my topics? It is my topic in the mid-cap banking space because of the growth that they're able to do, not only in deposits, but also in the loan book. And they are very, very aggressive in provisioning. So, they have provided there's a certain part of the book that that is a little overdue. They have provided 90% of that as provisions in the last quarter. So even if they turn NPA, he's more or less done with all the provision that he needs to do. So now what you're going to see is profitability increase. And if those don't turn into NPAs, he's going to be able to write all of that back. So according to me, IDFC First Bank valuations, again, very attractive. So both of them are a buy. But since the question was predominantly on IndusInd Bank, I say hold on and buy an average whenever you can.
Yeah.
Among the Canara Bank and Indian Bank, which one is better for the region of 1 year?
For 1 year, okay. And you haven't bought either of these right now, right? Just clarify.
Yes, both I am holding. Both I am having. I wanted to invest some more in among these two.
Understood. Okay. So let me take your question, Bhaskaran, to Vaishali on the charts. He's holding both of them as he's pointed out. I do not know exactly what price, but the question effectively is, if you were to deploy more at this stage, which of those two would you pick?
So, well, I would say overall, full PSU banking sector has shown good corrective move. And chartically, if you ask me, both are on similar pattern. So I would say, well, distribute your stocks in both, money in both these stocks. And once the PSU sector starts moving, you will see rotational move coming in almost all these stocks. So I would say my view would be to add more in both.
Add more in both. All right, that's a view. VL E-Governance and IT Solutions is the name of the counter that we're looking at. Unfortunately, it's a very small company. Market capitalization of 1,600 crore rupees. And Harjeet has got a question. She's Harjeet has bought at a price of, oh no, not even giving me the price, of 400 shares. Any chance you have a view on this, Samir?
Sorry, again, no coverage on
Okay.
this one.
Do you have enough to talk to us about this, Vaishali, on the charts?
Sorry, come again. It is, you said VLE GOV, right?
Yeah, that's right.
Which is,
Yeah, it's gained quite substantially in the year to date, as much as 132%.
I would say keep a trailing stop loss. Right now it is getting into a consolidation. We saw some profit booking. So the near-term stop loss which one can look at is 145. If it goes below that, then it can get into a negative territory. But the range right now would be 160 as resistance and 145 as stop loss. So either ways, the view gets decided. If it goes above 158, 160, it's ready for further up move. But if 145 levels break, then it's time to exit for some time.
Okay.